Good morning, good afternoon, or good evening, depending on your perspective on the world, and welcome to the Wendell Effect. My name is Brandon Wendell, Chartered Market Technician, and I'm here to do some analysis on the markets with you today. So before we get started, just apologize that there was no video for me today. Unfortunately, some technical issues, but you're here for the charts anyway, so we'll move along. Always been told I've got a great face for radio. Anyway, so as I've mentioned before, we are not registered broker-dealers or investment advisors. We're taking a look at this information from an educational standpoint only, not telling you to buy, sell, or hold anything in particular or giving any personalized recommendations about the markets. It's just for educational and informational purposes. We are also not subject to any trading restrictions, so I can have a position in security or initiate one at any time, and basically there's no guarantees of success, and there's always risk involved in the markets. No matter what we do, we can't eliminate, we can only minimize the risk. So moving along here, if you want to stay in touch with me, you can email me at thewendelleffect@tradingmindsetassociation.com, or you can also contact me on Twitter as well. @TraderBW is my handle there. Obviously, you found us, so you can pretty much search for us anytime you want to on YouTube with the Wendell Effect to watch some of the other previous videos or look at the new ones coming up. Don't forget to hit subscribe and like to let us know if you enjoyed the video, and that way you can be notified when new ones are coming out as well. Really appreciate that. The help there, sponsoring, or not sponsoring, but following us. And of course, our website, we're doing a lot more work on that, but it's tradingmindsetassociation.com. So for today's schedule, a little bit different. By the way, next week, I'm going to have a special guest. I'm not going to tell you who it is yet, but I got a special guest, and you'll really enjoy that. We're going to have a nice little talk about the markets and their journey through the markets as well, and journey as a trader. So anyway, for this week, I'm going to do my weekly market analysis as usual with the equity index futures. Also continuing on with the energy futures, as I've gotten a lot of requests regarding that. So I want to go ahead and follow up with the requests and obviously give the people what they want. And we got some sector analysis as usual. I'm also going to go back to the Indian markets, and I'm going to go ahead and do some crypto analysis today in lieu of the chart school. We will continue again with the chart school next week and more educational information as well. So starting off for the week of May 1st, when it comes to the equity indexes, as I mentioned before, I'm just going to go ahead and do this live, really, jumping out to my charts. You can see the weekly chart. Boy, what a week it was. Really, it was more Thursday and Friday, that big sell-off. And we broke this low, but we didn't make a new yearly low. We're very, very close. As you take a look at the S&P from the highs, we have retreated about 14% on the futures you can see there. So not officially in a bear market, but obviously extremely bearish, if you will. So definitely something we want to keep in mind here as we're looking at these markets. So we'll go ahead and delete this. And basically, if we were looking at projections and trying to figure out where we're going, we had impulse down, correction up, and we've already exceeded one target. It doesn't matter which one you use. You could use either one of those lows, but really that was kind of the end of the downward move and start of that retracement. So you can see that we have surpassed one target on our way down to the next target, 39.60. If we're looking, I'm going to have to actually go to a continuous contract just to be able to see where the demand zones might be lying down below and where our target is going to be as well. So again, make sure this is clean for the chart, and the projection, as I mentioned, move down, retracement up, and we've got a target right around 39.52. Well, as we look back, this is not really a good area of demand here. We have rally base, but that doesn't, I don't think I closed it inside. Let me just verify here. 39.5850, 39.64. No, it doesn't. So it looks almost like it would be a zone, but it doesn't quite qualify. We'll have to see if it ends up working out, but there is buying pressure that begins at 39.64. Below that, there's really not much demand here at all. There's nothing that can even, let's see. We've got, nope, sorry, that is not a zone. We got rally, base. That doesn't quite work either. So we may not have any kind of demand for quite some time if we start dropping. That's crazy. No, there really isn't anything here. We got drop, base, rally, way down. I don't think we're moving down to 2600. So really, I'd be focusing more on the Fibonacci extensions than the demand. Although, there we go. We do have correlation right here. That demand zone, 39.64, lines up with the Fibonacci extension. So that may be where we're headed as we speak. So we'll drop down to the daily time frame. and just take a look, see what's going on here, if there's anything else along the way. We are currently impulsing down after a correction. I don't really have any changes I can make here for the impulse and corrections. Maybe, again, just trying to figure out where pauses might be, because the overall trend is still bearish. And another pause might be this 4063. We had impulse, correction, impulse, although really that started there. So it might be a little bit closer, just under 4,100, we might get a little bit of a bounce. I wouldn't be surprised to see a little bit of buying pressure coming in after the big sell-off that we had on Thursday and Friday anyway. Typically, when you have that big of a move, you'll get some profit taking before you continue to push to the downside. And I want to go back to the specific contract to get the more detailed information. As we drop down to the 4-hour time frame, you can see that we are just making lower highs and lower lows, and doesn't look like anything's changing here as of yet. We had a positive divergence, and I thought there was going to be a small reversal of the trend. Basically, this is what happened. You had that positive divergence where prices made new lows, indicator made the higher lows, and we followed it with a confirmation of basically price making a low with the RSI failing to go below 40. Now, normally that would be a great signal for a reversal of the trend. However, this happened while we were not at a strong demand zone on the higher time frame. So that was the first suspicious thing. And then secondly, as we rallied up, we failed to break above 60. And as you can see, we've resumed the downward trend. So this was just a small hiccup. It looks as though we're going to continue to push downwards here in price. And I don't believe I have any demand zones anywhere nearby that are likely to hold us up. So if I zoom back, you can see behind the life of this contract. Let's take a look on that continuous contract yet again. And once more, I'll put in a horizontal line here, go back to see, is there something that might cause prices to pause on this decline that we've been experiencing? And there really isn't. You know, we've got these little dips which rally very sharply, but there's no demand at any of those dips. So continuing to look down and left, we've got nothing until we hit that weekly demand zone that I was mentioning. As a matter of fact, the first zone that I do see happens to be right at the top, rally, base, rally right there. Let me change this to the higher time frame. There we are. So you can see the difference between the two. We actually have a couple of zones right in this area as we come down. So it looks as though we're going to try to break 4,000. And we may get a small pause along the way at around 4,100. But other than that, it looks very, very bearish for these markets. And that should take us down into bearish territory, I believe. Well, let's make sure. We go over to the weekly chart again. And looking from the highs that we had at the beginning of the year. Oops, wrong button, sorry. I'll delete that anyway. To where we are currently, we're only down about 14.34%. If we get down here, no, actually, we're not in bearish territory yet. We're only at 17%. In order to go into a bear market, we got to go 20%, which, by the way, the Nasdaq has done. And speaking of the Nasdaq, I want to show you, if we go back to look at the leadership, basically March 28th was the recent high that we made in the markets. So if we start comparing everything from that March high, you can see that the Nasdaq is definitely our leader to the downside. Clean this up. So we want to pay attention really to the Nasdaq. Since it is the leader downwards, it's going to be the first market to bottom out. And it'll kind of tell us where we're likely to bottom out before everything else turns around. So let's go and take a look at the Nasdaq. Start off with the big picture, weekly, and NQ. I'll use a continuous contract just so we can look back in time. You can see that we did move down from this previous area of weekly supply. As far as weekly demand, we have a little area potentially rally, base, base, and rally at about 12,139 and a quarter. However, this, oh no, it wasn't tested. I thought it was. It has not been tested. So that may be where we're headed right now, but we're not going to go straight down. Part of the reason why, you can see that prices are making a fresh low right now for last week, but our momentum has died off a little bit. So it's not truly a divergence because we haven't put in a bottom yet. But if we end up putting in a bottom on price and we make that higher low on the indicator, that would suggest that there's going to be some sort of a retracement. Not a reversal of the trend, but simply a retracement. So it hasn't happened yet. We go down to the daily time frame. And first things first, I'll look for an area of demand to see, are we likely to turn around anywhere soon? Looking at the daily, I don't see any kind of demand anywhere about here. Once more, this is the weekly, so we'll change the color there. And looking at the daily, there's our demand that we're coming down to, the fresh demand zone right here. So we've got 11,987, basically just breaking that 12,000, which psychologically would be pretty damaging to a lot of people, seeing that psychological barrier of 12,000, that whole number being broken. And we could get a little bit of a bounce there, but like I said, this is not going to be a change in the trend to push everything back up. It's simply going to be a small correction to continue downwards. As far as daily supply, it looks as though we've got drop, base, drop right here. I don't know if we'll be able to rally back that far, but if we do take a look at our most recent impulse down, if we make it to this area, again, it's all about getting down there. We don't know yet what will happen. That's 11,987. Let's see where our retracements could take us. Let's make sure this is in the right spot. So coordinates, 11,987. That was close, but we want to be exact, so there we are. And I'll get rid of this. Although we are actually diverging a little bit more, perhaps. As you can see, prices, well, we haven't really made any lows yet. We've got this low and a low and the indicator, but we don't have a divergence yet, so keep an eye out. But overall, if we pull back, we could go back to the 61.8% retracement of the previous impulse and run smack into that supply zone. That would be a great opportunity to join that downtrend. As far as where we're going to bounce, again, we don't have anything until the 12,000 or 11,987 until we hit that Fibonacci extension that matches up with both the daily and the weekly demand. So look for the markets to continue to sell off until we reach that area with, of course, a small bounce. We're not going to go straight down. We might have a little bit of kind of like what we did last week with the big green and red mixed for that market. Dropping down to the 4-hour time frame just to fine tune this a little more. We see that we got plenty of selling pressure, getting very, very bearish still, so nothing telling us that anything's going to change. I think this is it. We're going to be heading down to that 12,987. Then we'll get a little bounce for another selling opportunity. Moving on to the Dow. Start off on the weekly chart here, and I'll clean this chart up just to make sure, not messing with anything old. You can see this has been a bit stronger. We haven't made the new lows like we did in the other markets, the Nasdaq and the S&P. So this is holding a little bit more strength than the other markets, but overall still extremely bearish. Just kind of checking this out to our lows. I want to use this rather than that low. And the reason why is that's the end of our downtrend, the beginning of the correction. And even on this correction, our beginning of our downward impulse was really right here on this candle rather than that high. So I think that might be a little bit more accurate using the actual candles that made the impulses and corrections rather than taking the absolute highs and lows. Overall, this is just an estimation. It's not exact. So that doesn't really matter much. Anyway, I'm going to go to the continuous contract once again. And the reason why is I just want to see if there's any kind of demand nearby. But really, it's the Nasdaq that's dictating where and when we're going to bounce. We do have a demand. Look at that, a little drop base and not the best of rallies, to be honest with you. There was no follow through right away. We had a big kickoff and then a little pullback here before we moved a bit higher. So this would be the demand right here. 30,512 to 31,637. Very, very wide in comparison to the move up as well. So not necessarily the best of demand zones, but that's it. We go down to the daily time frame. And once more, well, we're hitting a little bit of demand right now, it appears. Let's see, drop, base, 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 and rally. There we go. We've got that demand that we've been into multiple times. The fact that we've been in there multiple times means it's pretty weak and likely to be broken. Now, the only thing that's saving it is that we're not dropping down very quickly because as we're moving down, we lost a little bit of momentum. You see lower lows in price. However, we didn't get that in the momentum, and that is a positive divergence, which usually leads to a little bit of movement back up, but I'm not expecting a lot out of this. Remember, this is the strongest market out of the four, I believe. So we go to the specific contract and drop down to the 4-hour time frame. Not really seeing much else. I mean, we hit this area and retested, dropped. We're getting nothing but bearish pressure. We're back in the bearish territory on the RSI. So as far as any areas of demand down below, we've got nothing that's fresh. We do have this demand zone. Little drop, base, rally, tested. So we might get a little bit of a bounce there as we're losing our bearish momentum, but it's still somewhat strong. So I wouldn't expect too much of a bounce. Again, I'm not really convinced I want to short the Dow, as it's not the weakest market. You typically want to short the weakest market. But as we move back to the upside, because the Dow is the strongest of the markets, we may end up using this area as a little bit of supply. Nope, it's this one right here. It's really drop, base, drop, supply zone. That could be the catalyst that takes us lower on the other markets. So remember, this will be the leader to the upside unless something else reverses and takes over, because it's the strongest of the four markets. But once it hits supply, everything else is likely to drop. So keep an eye out for the 33,611 if we do start to rally in the new week. And then finally, the Russell. Looking at the bigger picture here, I'll go to the weekly chart. And let me clean this up. You can see we've finally broken out of our sideways range that we have been in for almost the entire year. We had a little bit of a move down at the beginning of the year, went pretty much sideways. We're now clear of that and making fresh lows. So definitely continuing down. If we take a look at the preceding impulse down, correction up, we've already exceeded target 1 and should be moving down towards our next target of 1751. If we go to the continuous contract, I actually don't think we have anything to hold us up. And clean this up again. You can see I was using that same extension before. Impulse, correction. And let's see here. We've got the horizontal line I can put in to go back. No demand. That's not demand. There's two leg candles next to each other. It's a retest of a demand zone. Oops. Tag that wrong. Oop, there we go. Let's get this right. So we had a drop, base, rally with the breakout. So that was my demand zone right there. Tested already. For that was a great trade opportunity, obviously. And it looks like we're going to continue to push down. We might test this again, maybe use the untested portion right there. And we have a Fibonacci target inside at 1496, 1500. We're not getting there next week, obviously. This is a weekly chart, so it's going to take some time, and that could be part of our bear market move. So overall, right now, if we're trying to figure out where the heck we're going for next week, let's drop down to the daily chart. Lots of bearish momentum, no signs of this turning yet. If it does, well, I would keep an eye out here. Not sure how well this is going to... may have already tagged it. You can see we have drop, base, drop with follow through. Nope, we didn't test it yet. So that's the area of supply, 1931.5 to 1957.6, that I would look for a shorting opportunity. Target number 1 is this projection number. Let me go ahead and fix this. And get the lines on the right side so we can actually see them. Or the labels, sorry. So we got target number 1 is 1740. Let's see if there's anything else along the way. I might have to go back to that continuous contract, I believe. No, we don't. We're good. Oh, I'm on the continuous. So we do have a little bit of demand that we're coming into. Drop, base, 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 and rally right now. We have another zone just below. Rally, base, rally. And then a couple of rally-based rallies right here, looks like. That's a little wide compared to the move out. So I don't know if I carry that one. I would say that, oh, that doesn't work either. It's close, but there's another demand from the higher time frame there that I'd rather use. Anyway, that's well beyond this week's price action area that we're going to be going to. So what I would look for if we get any kind of a balance is to short at 1931 with a stop above 1957. And our targets, we'll just have to see if we hit this first at 1847. If we do, tag that before we go up, then your first target is 1792. However, if we don't, if we go up first and hit the 1931 for the short, then target 1 would be 1847, target 2 would be 1792. So that's pretty much what I'm seeing on those equity markets for now. We'll go ahead and jump on over to the energy markets again for the week of May 1st. And we'll start off with crude oil and take a look to see what's going on there. So looking at the June contract as the front month, you can see on the daily chart, I think I talked about this last week. Let me just verify that. We're in consolidation. You can see it. The price is consolidating. These are, last week. And it doesn't look like we're ready to break out yet. And we didn't. So we did try to, I believe, almost had a little false break there. Let's see, which one was I using? Yeah, just those. Okay, the highs. And you can see on the bottom here, there's our consolidation. So we had a false breakout. And I said, you got to be careful. You got to wait for closes outside the range and then the retest for the trade. So we never got the close outside, and obviously prices fell back in. We also couldn't get above 60, which shows we just don't have enough momentum to trend anymore. So we need to get above 60 or below 40 for the trend to continue in either direction. Just hasn't happened. So let's see, as far as where we might be going this week, obviously if we're at the top of the range, we should be getting ready to head down to the bottom of the range, especially because we don't have momentum to carry us higher. We can drop down to the 4-hour time frame and see. So let's see that false breakout above the highs. And anyway, we did get enough momentum to at least break us out of the high, but I don't know. We just don't really see a whole lot of commitment to the trend in either direction here. You can see that we did have rally, base, drop, supply zone that held. Now, here's the interesting thing, okay? We see that, we went into the supply, RSI is above 60. Normally that means that supply is a lie, that you're not likely to hold. However, we did. But here's the kicker. We are moving down, and we started that move down with the RSI above 60. Typically, when that happens, you're not able to maintain new lows without a retracement. So what I mean by that is you see back here, we had a high, and when we started moving down, we were well above 60, so we had trouble making a new low right here. Came down to that low, couldn't stay below it, and we bounced. However, right there, when we bounced, notice the RSI did not get above 60. So what happened on the next move down? We easily broke the previous lows, all of them. Okay, so here we are moving down again, and we're above 60. That means that as we're moving down, we are going to have difficulty breaking this low at about 100. Okay, really good whole number there, century number. So we're going to have trouble breaking 100 without some sort of correction. So I would say on this move down, look for a big bounce. If we bounce and do not go above 60, then we should drop down and probably target this area of demand at approximately, wrong one, right there, 95.28 to 97.45. That's what I would look for it to do. If it does start moving down, and like I said, we're not going to go most likely below this low, we got to take a look to see if there's a retracement somewhere, if there's something we could possibly get in on the short, maybe on the 60-minute time frame. So as prices are moving down, we're likely to have a retracement. We go down to the 60-minute time frame and see if there's any correlation with a zone. There really isn't. So unfortunately, the only thing I have right now is this as a zone. Let me delete this for now because it's already tested. So if prices start to bounce, and you can see the momentum dying off, look at that. Strong selling pressure, a little bit of buying pressure coming in, small range candle. We lost the bullish momentum or bearish momentum, and we're having trouble getting below 40, believe it or not. So that being said, we are in for a retracement pretty soon. Not sure where or when, but when it starts to pull back, I would look for a new shorting opportunity, as I said, right here at 106.28. The ultimate target is 97.45, but in the meantime, there may be some other areas that we bounce. You can see we've tested this once before at 100.89. We could end up bouncing there again. So I would look for a short at about 106.28 with a stop loss above. I'll move this out of the way. You want to put your stop loss above. How far above is up to you, whatever your rules call for. target 1, you always want to get out just before you hit the zones, not at the zones, just so you're not competing with everybody else trying to get out. So target 1 is going to be somewhere in the neighborhood of 101.96, maybe get out above the 102, about 102.13. And then target 2, I would say probably around 98.39. So that looks pretty good for me for a shorting opportunity if we can get that move back up. The other caveat is for that short, I want RSI less than 60. Otherwise, don't take the trade. So that's kind of what I'm seeing right now. All right, so let's go over to nat gas. And I'll start off with the big picture and get an idea of where we are right now. I'm on the weekly chart. Big parabolic move we had to the upside, and then of course started pulling back. But here we are trying to push back up a second time, trying to make another high. We'll see what happens with that. But if we make another high, either close to or higher than this one, we need more momentum. If we do it with less momentum, that would be a divergence and drop. So we do have demand down here as a target. And what are we looking at there? Let me make sure this is lined up. 543 to 5.094 is our zone. That'd be the downward target if we can pull back that far. I'm wondering if that's also a Fibonacci retracement. I'm not going to bother drawing it. That's really the only demand. We go down to the daily time frame, and you could see that, well, we've made lower high. We have not made the lower low, so we're not officially in the downtrend. We have to make a lower low after the lower high for the downtrend. That would also require us to break 40 on the RSI, which confirms the downtrend at that point. So it hasn't happened yet. As far as the demand, there's nothing good right there. We have rally, base, rally. That's it. So on the daily time frame, we have a little bit of demand there. That could be a target number 1 before the weekly target, which is lower right here. And, oops. Inside of that weekly demand, we also have a daily demand zone right there. So those are your second targets. Like I said, target number 1 is 5.813. Got to figure out where to get short. We don't really have an entry point here yet. Could just be the breakdown if we start that downward trend, or even a retest of this area once we break and close below for the downtrend to confirm. So just got to be a little patient here. It could happen this week, where we end up pushing down, closing below the 6.471, retesting that area for a short before it drops down. Unfortunately, we may not get a good reward-risk ratio here. If you try to trade the breakout, which I don't usually do, but if you were to try to trade the breakout of the 6.471 where we begin a downward trend, you can go ahead and put in your stop loss as 1 ATR. So if you look at the average true range on the security, you're looking at about 0.468. So about 50 cents stop above wherever you get in. So if you get in at 647, kind of setting up here on the crude or net gas, 6.471 plus point, what was it, 4? Oh, I'm sorry, it's 468, I think, for the ATR. So we're looking at 6939 as a stop loss. Let's see, coordinates, what did I just say it was? 6939. There you go. So you have a possible shorting opportunity on the breakdown with the stop loss above. Obviously, that first target's only a 1-to-1 reward to risk. The second target's the better opportunity, and that gives you the better reward as well. So something to just kind of keep in mind, look at, see if that works out. On the 4-hour time frame, we are moving. Oh, we've already hit supply. Look at that. So unfortunately, we might have missed the best entry point, which was right here. You can see we had rally, base, and drop. And on that move, we just barely tagged it, but the RSI did not close above 60. So that's confirming the supply will hold, and we should be able to break down to those targets we had before. This is already a tested demand, so that won't work. So yeah, we're likely to keep going down from here. So you can be patient, look to see if there's any new opportunities to get short, but ultimately it looks like we're heading down to 5.813 and then down to the low fives. Moving over to gasoline. Start off in the big picture once again. And there we go. Let's see what we got going on here. On the weekly chart of gasoline, pretty much just going sideways again. Consolidation, kind of like what we saw on crude oil, losing all momentum as we speak. I go down to the daily time frame, and still in an uptrend, just not very powerful. We have higher lows and higher highs. We actually did get above 60 finally on a momentum breakout there. Look at that. So unfortunate for the filling up your car, but good if you're long on gasoline because it does look like it wants to continue. And not the best momentum, but definitely still there. You can see we pulled back just a little bit on the daily time frame. As far as our extensions and targets, let's see, did we hit anything? Yeah, we already exceeded this one and haven't gotten to the next target yet. I'm not sure if these are working or not as far as the measurements. We had impulse, correction, impulse. You can see we stalled in the area, but it wasn't exact. But look at that overlap there. We have this impulse. And notice how it correlates and lines up with the other impulse as well. So we've got two lines correlating at 3.57 right now. So that is a high probability area for us. 3.57. Don't know the exact number. It doesn't really matter. It's just in that area. So keep that in mind if you're trading gasoline. 3.57 is a pretty good target to the upside if we're going to continue. And it does look like we're going to continue to the upside. If we get a pullback, we're going to look for an area to buy. I don't really have any good demand zones. We've got these little pullbacks we've been experiencing, but it doesn't really stop at any kind of zones for us to get in. Really weird. So just got to maybe use a Fibonacci retracement or just wait to see if it starts breaking to the upside for a long opportunity. So like I said, our target though is the 35713, but I've got no real strong entry. I don't have anything. Yeah, we can go down to the 60-minute time frame and see if there's anything there. And we do. There we've got a demand zone right here. 34017, 33868. That's your first area of demand. The problem is we don't want to be below 40 when we come into that area unless we have a positive divergence. You can see on these previous moves down, not one time are we below 40, and every time we make new highs. It said that earlier, right here. You make a low, you're below 40. Now let's do it with a vertical line. Every time you make a low where you're below 40, you fail to break to new highs. You can see the overall highs right here. We couldn't break above those without a pullback. Now we make a pullback, we're not below 40, we make a new high. Pullback here, not below 40, new highs. All of these, well, that was kind of disappointing, but for the most part, you can see we break to new highs every time we pull back, and we're not below 40 as we pull back. So we're close, but we haven't done it yet. If we keep going, this could be the failure to make the new high. So we'll just have to watch for that. And if that is the case, if we do go down and we don't get that, don't hold above 40, then we could see failure for this move to the upside at this area. And that would be 3.4686 to 34972. So keep an eye out on that. Finally, we go to the heating oil. And once again, go to the weekly chart. Starting off there, we've had that big move to the upside, and we just broke out of that consolidation that we had last week. You can see I was marking off consolidation, I think, in the charts. Let me go back. I forgot from last week. Let me just see if I show it. Pretty sure I did in the analysis. I just want to go back on my chart there. Gasoline, heating oil. Yeah, it was on the 4-hour chart from last week. So again, if I go up, am I showing the PowerPoint? No. There it is. Heating oil. And there was on the daily chart, we had demand at 320, but this is what I showed you on the 4-hour chart. We were in consolidation. Typically, when you have consolidation, you break in the same direction you were already moving when you went into consolidation. So I would suggest a break to the upside. Well, if we go down to our 4-hour time frame, that's exactly what you see there. We had a false breakdown first and then the legitimate breakout. And remember what I was talking about for the opportunities to trade these? I don't take the breakout trade. What I do is I wait for the retest. Okay, and here's why. You can see if you had taken this breakdown trade right there, thinking, oh, I'm going to short on the breakout, all of a sudden it comes back and you're thinking, uh-oh. Well, now I can see it's not going to work. And the reason why is when we broke out, we never went below 40. So we don't have bearishness to be able to continue to move down. And sure enough, we went to the upside. Now we break out. And again, I don't jump in right away. We are going above 60, which is a good thing. We pull back. And now as we pull back, we've been into bullish territory. That's telling me we want to go higher. So you can put in your long with your stop below the formation. And sure enough, that worked out really well. So if anybody took this from that information I put out last week, let me know. I'm kind of curious to see if anybody was actually able to take that based on the information I gave you last week. So starting off on the weekly chart, let's do this now and see what's going to happen going forward. We have made a brand new high, but, big but, as we're making these highs, we don't have momentum to sustain it. Look at how weak the momentum is in relationship to those moves up. Okay, so that we could be in for a correction pretty soon. That's all I'm saying. Not a reversal, but maybe a pullback. And we do have plenty of demand down below. You see on the daily time frame here is great demand, rally-based rally. It's a lot of candles, but 6, that's the max. We're okay. Here's our topping tail, selling pressure, getting ready to reverse. So we're getting ready to pull, sorry, not reverse. I should be careful what I say. To me, that looks like it's just going to be a correction back. And we've got plenty of demand at that 36871, 34818, as well as down below here. There's plenty of demand to make the markets bounce. So with that heating oil, again, just expecting a bit of a pullback first before we continue to go to new highs. I'm curious to see, did we get our extension? Look at that, dead on. Yeah, the impulse, correction, impulse, correction. Great. The fact that we're correcting right now, if I put in Fibonacci retracements from this last impulse up, should project or basically tell me where we're pulling back to right now. All right, so that's all done with the extension. So now we're looking at this retracement going on and where can we buy once more. We're on the daily time frame. I'm going to go down to the 4-hour and see if these line up with any sort of demand. And as we're pulling back, it doesn't look so great. Although, what's the low here? 9185, the close, 9186. So that is inside. We have, oops, wrong. There we go. So we have rally, base, 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 and it doesn't have the follow through really. So that's not a quality demand zone. I'm going to remove it. I don't have anything else. As far as demand, the only one I have is way down here. And obviously the higher time frame zone. So I would expect prices to pull back perhaps to one of these Fibonacci retracements and then bounce. Just have to watch it, see which one it's going to be. As far as demand, this is the only demand that I have. So we can go down to 60 minutes, see if there's anything else that lines up. And yeah, we do have drop, base, and rally, although that may be a test of this. Oh yeah, it is. So I don't have any fresh demand zones here. I would just look at one of these Fibonacci retracement points and see if we start to bounce out of one of those areas. So it's kind of risky to be able to take the long trade there, but that's all I've got, unfortunately. All right, so moving on, we're going to take a look at the stock market analysis for the sectors and see what's happened from last week to this week. Again, we're looking at the week of May 1st. So if I go into sector analysis, I actually saved from the week before, I believe. Yeah, that was 14th. So last week we have the 22nd, and you can see energy was the leader still, followed by consumer staples, healthcare, and utilities. But let's take a look live at what's going on here. So I go to my website. Basically, I'm going to stockcharts.com. Let me just show you how I get to this step. Stockcharts.com, charts and tools is what I click on. I then go to performance charts, and under predefined groups, we look at sector ETFs. So that's it. You can go back and rewatch that if you don't remember. And this is showing us right now for the last 200 days what has been moving in relationship to the S&P 500. Now, keep in mind, that doesn't mean that these are going up that much. If you take out the S&P, they're still going up pretty well overall for the last 200 days, but not quite as much. Usually, a lot of times you'll get a big jump there. But what happened here with energy is actually up 13% more than it was last week. That is crazy. There's a lot of bullish pressure there in the energy markets. Looking at the consumer staples, we actually lost 2% as it's dropped down from the 17s down to 15 and 3/4. Healthcare also just drifted a little bit lower, 0.05%. And then finally, the XLU also went down as well a little bit. Instead of, let's see, I forgot where it was from last week. We had, 19% on utilities, and now it's down quite a bit. Oops, as you can see, to 14%. So a big drop and big changes there. So if we start dissecting these to see what's going on, let's see what we had last week as well. Again, I go into my charts. I was looking at the XLE on the daily chart as a possible pullback towards an area of demand. And looking at the energy markets, Occidental Petroleum, trying to remember what else we had. And with Oxy, we see we had that pullback going on. Let's take a look at the sectors. If I go into XLE on the daily chart, and let me change this around a little bit because I've got the after hour stuff showing. I don't really need it. Where are we here? Appearance? No, that wasn't it. Which one was it? It's not showing here because I'm not on. Hold on. Just verify. Oh, I'm on the daily chart. That's why it's not doing it. So let me go to the smaller time frame. There we go, and take off extended hours. So again, go to XLE, the energy markets. We'll go to the daily time frame and get rid of this. There we go. You can see we pulled back to that area of demand that I had on that daily chart for last week. We actually gapped into it. So when you gap into an area of demand, wow, that's crazy. You go back to my slides from last week, and there it was. We're waiting for it to come down to that 72.72 on my demand zone, and we didn't have to wait long. It gapped down into that zone. Notice, though, we didn't go below 40 on the RSI looking at this chart. And the fact that we didn't go below 40 means demand should hold and push up. However, it didn't push up very far. We closed the gap and couldn't get above 60. That is suggesting that prices may come back down and continue to go lower. So even though overall it's been somewhat bullish, I think we're going to start moving down now and maybe even tag this area of demand. So we got drop, base, 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 rally. And we might actually go down towards a 68.75 now instead of holding up. So we might start to see the change in energy markets and getting some rotation of leadership from the energy into staples or healthcare or utilities now. So keep that in mind. We take a look at Oxy. And we had Oxy. Remember, we had a negative divergence here. And same thing. I was looking at bearishness. Didn't quite come down to the demand zone, but you can see we gapped down with the sector and are still showing weakness. This looks like it's going to continue to push down. Let's take a look at the 4-hour time frame here. I don't have a good supply zone. I was hoping there'd be something here to look for a shorting opportunity. There really isn't. And if I'd even drop down to 60-minute as well, we don't have much. So we did start to form a little bit of selling pressure here. You can see we can't get above 60 at all on the RSI. This is looking pretty weak. So we might end up going back up to 56.26 with a stop loss above 57.07 to target that demand at 48.67 on Oxy. That's what I'm seeing right now. Going back to that 4-hour time frame for the trend, very, very weak. So that's what I'm seeing, is that this trend is likely to break soon. So we may end up getting that shorting opportunity, but I'm not positive it's going to be able to get all the way up to the 56.26. But if it does, I'm looking for a sell targeting 48.67. As far as the other stocks that were leading, let's see. Schlumberger was the other one. We saw a fake breakout and then a break to the downside. Unfortunately, neither one of those got a lot of momentum, so it looked like we were going to continue just to drift sideways altogether. If we go out to Schlumberger, let's see how it's been doing. And I'll go to the daily time frame for a moment. You can see on the daily, we ended up with a breakdown, retest, and continued to move down. Just kind of choppy. We couldn't really go below, commit to the downtrend by going below 40 on the RSI. So unless we do that this time, this week, we're going to continue going choppy and sideways. I'd look for better opportunities. I'm just not seeing anything here. So moving along, if we go to the next sector, well, this was utilities I was looking at. We had PEG that I was analyzing, and we had a lot of momentum loss with the pullback here. And I said we need to see if 40 holds on the RSI. If it didn't, we were going to continue falling. If we hold 40, we're likely to have a bounce. So going back, that's XLU. So we go to XLU. And on the daily chart, look at that. We went into bearish territory. So it just did not hold. And as we're coming into bearish territory, because we are below 40, this is not going to be a good opportunity to buy the demand. Demand will not stand, again, because we do not have the momentum. We have a lot of bearish momentum. So we're likely to see, if anything, a little bit of a bounce here at the demand, but that'll be a new shorting opportunity. As a matter of fact, get rid of the retracement because we're more than retracing, we're reversing. So let me clean that up and get rid of the divergence. It's old. So what's likely to happen if we do bounce, you can see we have drop-based drop starting. It's not really formed as a zone yet because we haven't had a big enough move down. So I'd be hesitant to trade that. However, if we can go into a smaller time frame and get a little pullback here, there might be a shorting opportunity. I go to the 4-hour time frame. It's probably 60-minute we're going to look at. And not seeing anything here. We go down to the 60-minute. And let me clean this up. There we go. Well, there's nothing here. That's great. That's the problem. So just got to be patient, look for the right opportunities. The only thing we really have as far as a good supply zone now is we have rally, base, drop right there. That's about it. And that's not a good drop because it didn't have the follow through, even though we did break multiple lows. So that's the only possibility I see is shorting on the 1-hour chart. But I don't see us pulling back that far. I think we may end up stalling out somewhere in the 72 range. So probably, again, just look for better opportunities elsewhere. So continuing with the follow-up from last week, PEG, forgot about that. We had a little retracement that I was expecting before we potentially go higher. Well, let's see how that followed through. Going to the daily chart, you can see it didn't. On the daily chart, oh wait. Nope, that was the week before. So we had that extension. Hang on a second. I don't think I went far enough. This was from the 18th. That's right. And then, yeah, it didn't show the 24th. That's weird. Anyway, on the 18th, which that picture was showing, we were seeing a little bit of a pullback. We actually made it up to our target before retracing. So it made it to the Fibonacci extensions, and then now it's just dying off. So nothing really going on there. If we wanted to figure out what might be good in that sector, again, if I go to the utility sector, oops, I want to go to live charts here. We can go out to FinViz. And this is a good introduction as to how I find some of these opportunities. You can see Friday was pretty bearish. There was only a few green spots on the whole S&P 500. But I'm not looking for one day. I'm going to go to 1 week performance here. And again, we're looking at the sectors that might be performing better during this time of market movement or sector rotation. And honestly, the whole utility sector just died on us. You can see that, we went down about 5% over the last week. So really nothing was a good opportunity. You see the EXC, Acceleron, PEG, nothing. So we're looking at continued moves to the downside. There's nothing really good there as an opportunity. As far as the sectors that were performing, I probably should have kept that up. Stockcharts.com. As we go back there and take a look, charts and tools, performance charts, sector ETFs. Again, we have the energy markets doing well. Staples are falling off a little bit, but not as bad. Those should actually become the leader pretty soon. So if we go to those sectors on the energy market, for instance, there we are, and looking to see which markets are the best performers, we have Valero and Phillips 66. So those held up in a pretty bearish market. So we should be looking at those. Start off with Valero. And here we are on Valero with the daily time frame. So as we look at the Valero on the daily chart, we can see overall bullishness, but this is not necessarily going to be, well, actually it could be okay, because I noticed first thing, a negative divergence. That usually leads to a pullback, which is actually what we need in order to be able to buy, isn't it? So on the daily chart, expect a bit of a pullback. We have all-time highs going on here. So if we project, we have an impulse up, correction back down, and we have our projections, you can see target number 1 was hit on our first move up. So we have another possible target here at 125.10. However, the other thing that can happen, we got to see what we're going to pull back to on our most recent impulse. So if I go back down to a 4-hour time frame, trying to figure out basically where we're going to pull back to our correction, we do have a demand zone in the middle there. Not necessarily the best, but right here. Oops, it's only one candle, so I usually go wick to wick. So there's your possible entry point, rally-based rally at 103.74, 106.62 with the target at 125.10. I can also verify based on, again, impulse correction down to, what was that, 106.62. And I would change the color so we don't get it confused, but it looks pretty good because, here, I'll just use this. You've got overlap right in here at that 125 area. So the fact that both of those correlate, that could be a good target number 2, where basically your entry would be on the pullback to 106.62 with a stop loss below this 103.74. Again, it's up to you where you want to put the stop loss with how much of a buffer. Target 1, I would say, is 118.55. And then target 2 is 125. You want to get out kind of in that area when it starts stalling out. That looks pretty good. So the other one that was very, very bullish was Phillips 66. But this is the first trade opportunity I would look for. Of course, on the pullback to the demand zone, we should be above 40 on the RSI. Otherwise, it's not likely to rally. So Phillips 66, let me see, what was the PSX? I couldn't remember. PSX. And this, not as good. I think I'm going to skip this one. And the reason why I don't like it as much is we tried to rally, couldn't make a new high, and couldn't get very high on the RSI as well. You can see, I'm not sure what happened with the earnings, but it doesn't matter because the fact we couldn't make that new high and couldn't get above 60, I'm not interested in buying this. We're getting a nice pullback right now. Look at the daily chart. It's just not strong enough. So skip that. Even though it did pretty well for the week, that's it. It's not going to keep going. So as far as shorting, there's not really an opportunity to get short here either. We already missed it. We had rally-based drop. Shorting opportunity happened on Friday, and that's about it. So as far as the other sectors that we might see a little bit more bullish movement into, remember we have the healthcare. It's kind of fallen out of favor. I don't know if we're going to get any bounce there or even on utilities. Doesn't really look it. It looks like staples is kind of it. But if we do look at the utility sector and healthcare, let's see what we've got. As far as healthcare, where are you? I'm in trouble finding. There it is. We do have Merck and Eli Lilly and Pfizer that are doing pretty well. We could take a look at those to see if they're likely to continue with that sector. Oops, wrong button. MRK. And at first glance on the daily chart, you see we made a new high, but look at that, a lot of weakness. So if anything, this may be getting ready to drop once again. It's not going to make new lows, but it should retrace pretty deep. I just don't really see a good entry point or a trade opportunity here. So I'll stay away from that. Lilly, going to the daily time frame, we are possibly changing to a bearish trend right now. Oof, look at this. We got a major shift. You've got that high we tried to make here, but we did it with a lot less momentum. That is a huge negative divergence. So we may get some good shorting opportunities coming out here. The other thing that I'm seeing is after that was done with that negative divergence, you can see that we got a high and lower high on the RSI. That's under 60. So that's suggesting the trend is going to reverse here. So I'd be looking for some shorting opportunities. Let's see on the weekly chart. Do we have any demand? Not until here at 240. So there may be movements down until you reach 240. That's pretty bearish. Additionally, when we look at this, if I go to the daily time frame, nothing great here. The first demand that I'm really seeing is here at 250. So we got a lot of opportunities to the downside. As far as shorting and getting in, we gapped into the supply on the earnings here, as you can see. The supply, I'm not sure if you can notice that, but we had base drop right there, and we're already leaving the zone. So we're kind of late to get into this. and that's likely to keep pushing down. It's not going to go straight down, so there may be some new opportunities to short. Just got to be patient and look for them. But definitely seeing opportunity to the downside here. And until new zones form, don't jump in, but look for new zones, because ultimately this is going to move down to the 250 range. That's what I'm seeing on Lilly. And then, whoops, I keep doing the wrong button here. Sorry. Last one was, Pfizer, PFE. So looking at Pfizer, and again, going to the bigger picture here, the weekly chart first, just to get an idea of what's going on. Looks like a big head and shoulders, doesn't it? Left shoulder, head, right shoulder. It's about to break the neckline. So another shorting opportunity potentially. It doesn't line up very well to make it a good, clean head and shoulders, but you get the idea there. And notice on this right shoulder right now, we are not getting moves above 60 on the RSI. Huge divergence. This is on the weekly, so Pfizer's getting ready to collapse, it looks like. Wow. So if there's an opportunity to short, you definitely want to take it on Pfizer. It appears that it's going to continue to move down. Heck, let's go to the monthly chart just for the heck of it. Here's your demand. Right there, about 39. I don't see anything else really. Maybe this. You got drop, base, rally at 43. So again, I go down to the weekly chart, and if that head and shoulders breaks the full measure move, it'll take us all the way down below that stuff. I don't see it happening, but the full measure move is the height of the head, usually extended downward from the break, and that may get a $29 stock. So we'll see. It doesn't look like it's going to get all the way down there, but definitely a lot of bearish opportunities here. And I would look, let's see, at the daily now. We have an overhead supply zone. I don't know if we're going to get that high, though, to be able to get short. You have drop, base, drop at 53.10. And let's see, we've already retraced a little bit. Let's see what we've gotten so far. And about 38.2% is what we've already retraced. I don't know if we're done retracing yet. You can see lots of bearish activity. We can't get above 50, let alone 60, so we may just continue to push down. And if we do, we get rid of the, well, keep the neckline in mind. That was the weekly head and shoulders. When he closes below that, and then the retest for the shorting opportunity. I'm just trying to see if there's anything else we might be able to short or any other entries along the way. Also, our first target, impulse correction, depends on where we pull back to. We've got some targets we can project. So that was what, the weekly demand? I'm trying to remember now. No, it was monthly, wasn't it? Phew. That big time frame. Yeah, it was. That's the monthly. All right, so all the way down on the daily chart, not really any great entry points. We go down to the 4-hour time frame, and same problem. Well, on the 4-hour, there is something a little bit better up above. If we're not done retracing, which I'm not sure if we are or not, you've got this little drop, base drop right there. Might be able to get you in at about 51.63 to 52.16. You've got, again, drop base, good drop right there. Broke out of prior lows. I don't know if we're going to be able to make it all the way up there, but if we do, that would be a great shorting entry. And again, you got your downside targets on the bigger picture. So that's kind of what I'm seeing right now in the sectors. I'm going to leave it at that, and we'll move on. And we're going to change countries now as we move on. We're going to go to the Indian markets and take a look to see what is going on over in India on the Nifty and Bank Nifty. So I'll start off with Nifty Index. Go ahead and clean this up a little bit here. Nifty 50. There we go. And start off on the big picture weekly chart. So we bounced off a demand. You can see we tried to make a high. This is the weekly. So we've basically been going sideways for the past couple of weeks. We've lost a lot of momentum, and that's all we're seeing is that sideways movement here without a lot of conviction or direction. Overall, the markets, yeah, they're just sideways. We don't really have a trend in either way, either direction. I go down to the daily time frame, and same thing. We're just back and forth, back and forth. All the movements we try to get to the upside, we're given right back. And by the end of the week, in these 5 days, you were slightly higher, but not by much. So overall, there's just real lack of commitment in either direction in these markets. So dropping down to the 4-hour chart, I don't really have anything as far as trading opportunities. It looks as though we're stuck in a range. And here's the high of the range, low of the range that we're in right now. So just got to be patient to wait to see if we can break out of the range in either direction. If we're wondering what's going to be the catalyst, we can look at things like Reliance and other stocks. Reliance Industries being the biggest weight. And you see we hit that demand zone I predicted a while back and almost up to our next projection. I don't remember, that wasn't weekly, was it? No. On the weekly chart, by the way, we're still seeing lots of bullish pressure. We got earnings coming up very soon, though, too. We got to be careful of. Obviously, that could halt the markets. Ooh, now we see something interesting. Let me clean this up on Reliance. This is not good for the Nifty if you're a bull, because what's happening is prices are moving to the upside, but we're doing it with a lot less momentum. And what do we have? Earnings coming up here on May 6th. So be careful of that. Okay, earnings can make a good trade into a bad one very quickly, or a bad trade into a good one. So just be careful. Anyway, negative divergence is suggesting we're going to get a pullback on Reliance. And the question is, how far back is it going to retrace or pull, where's it going to bounce? Because this doesn't look like a trend reversal. It's just simply a pullback that we're going to experience. So I go down to the 4-hour time frame, and we have this area of demand right here. Drop, base, and rally, 2118, 2663 is what I'm seeing right now. Not the best demand, but it did break out of prior highs there. Again, it should be happening pretty soon because there's your divergence. You can see prices are trying to make new highs, and we're just losing momentum. So expect a pullback, but 2718.90, 2663.65 is your bounce point. As far as targets go, let's see, we had already impulse, correction, and you can see we had target 1 already. So on this bounce, where we are likely to go would be target 2 of 29.29. So look for the bounce of 27.18 up to 29.29 on Reliance, and that could help hold the Nifty up a little bit. But as far as, really moving it, I don't know. It doesn't look like it's going to be much more than that. And obviously, this is just one stock, albeit the biggest influence. It's not the only influence. So if we are pulling back first, expect some weakness in the Nifty until we hit that demand zone on Reliance. Now, let's look at the Bank Nifty. And on the Bank Nifty, same thing. We pulled back to a little bit of demand here. Let me go to the weekly first. Not really seeing anything on the weekly chart, though. So I think it was the daily. Yeah, you can see we had a little bit of a pullback here on the daily to this demand last week, and we flatlined. It looks as though we're going to go sideways for a while because we have no momentum in either direction, unfortunately. So Bank Nifty looks like it's going to be a little flat and choppy to trade, even dropping into smaller time frame. I don't see any great opportunities. We happen to have a bit of a sell-off as we were at the top of the range. You can see getting rid of this zone and looking at price action, that's a pretty tight range we're sitting in. So until we break out of that range, there's nothing we can really do. It does hint at a possible breakdown rather than up. So if we end up breaking down, we could try to seek out. There's a little bit of demand right here. 34,546. If we can break down from 35,803, that would be your first target. And then I don't really have anything else below that. So that's all I'm seeing right now is a possible breakdown out of the range. Be careful you don't get a false break. And we did come in moving down, so we should break to the downside. So that's pretty much what I'm seeing on those Indian markets. And we're going to wrap up this week's session by jumping into crypto for May 1st and take a look back at the crypto markets because I had a bunch of requests about that. So going into my watch list here on crypto, I'll start off with the granddaddy, which is Bitcoin. And we'll look at the weekly chart on Bitcoin and get an idea of what that's happening there. You can see that we have been sideways as well, lack of momentum. We came off a weekly supply zone and pushed down. Not the best demand right here, but it is, it's a weekly demand zone, I guess. There's not much going on there, but that's about it. You've got drop, base, actually that's the leg in, drop, base, and rally right there. And we're kind of flatlining. So we don't have enough momentum to break through, but we don't have enough momentum to push higher either. So it looks as though we're just going to get kind of a sideways movement here on the weekly. I go down to the daily chart, and we bounced off supply recently. You can see there was a supply zone here, drop base drop, pinged off of that down into this buying area. Again, that was the weekly demand, but I'm not seeing much of anything going on. Overall, looks as though we're still pretty bearish. And you can see we're getting below 40, but not above 60 at all. So crypto, or sorry, not crypto in whole, but Bitcoin does still look pretty bearish, and not seeing any reason for it to turn around here. Technically, if we go to these lows, there's nothing here as far as demand. Oh, there it is. So that's where we're basing right now, is just in front of this little bit of demand here. We have rally-based rally, and it's not really doing much else. So if we are to break through this area, let's see where we might be going. I think it was pretty far down here for the next area, and it is. You can see that we don't really have much until this on the daily time frame for Bitcoin. So if it does get weak and we do break down 23,000, I was calling for that for about a year now as a possible buying opportunity. So I'd love to load up at that area if it gets down there. We just got to be patient. It's definitely not going to do that this week. But on the daily chart, we are very, very bearish and still seeing potential movement down to 32,607. I don't see anything else along the way to hold up price. There's no real strong, fresh demand zones. So unless something changes, I think we're just going to kind of drift down lower to 32, and then that'll be the first test. But I think that's a tested demand. Nope, that's fresh. So that's our first fresh demand zone. If that doesn't hold because we have too much bearish momentum, we could go as low as 23,000. So just keep that in mind as you're watching Bitcoin. And if I drop down to the 4-hour time frame, let's see if there's anything else along the way. Obviously, we're not going to go straight down, so there'll be some buying opportunities along the way. We're getting a little bit, it's not really, I wouldn't call that divergence. I was wondering if we're going to get a bounce here. We have drop, base, rally going on right now. As you can see, drop, base, little rally, but it's not very strong, and we're pretty much going to melt right down through that area. So the next area of possible bouncing, that doesn't look good. I thought there might be something here. There's no demand. So yeah, it looks like 32 is it. Moving on to Ethereum, start off on the weekly picture and start off fresh here. What happened? There we go. Clean that up. There it is. So looking at Ethereum right now, we are down at 27.91, and same problem. We just have a lack of commitment in either trend. We have a little bit of consolidation. As you can see, higher lows and lower highs. So not much going on there. Going down to the daily time frame, and still in a bearish trend. It's just not very strong. It's getting weak. But we're approaching a little demand down here. That'll be our first downside test. Drop, base, rally right there. And yeah, we'll have to see if we can bounce from 26.08 to 24.86. Below that, I'm not sure if we got anything. Let's take a look. I mean, there's got to be something somewhere. It's just a matter of how far away. No. There's the rally-based rally right there. 2045, 1945. And let's see where else. What do we have? That's tested. Not much else until you get all the way down to 751. I don't see that happening anytime soon, but there's nothing really to hold us up. So as of right now, we've got the consolidation. We're just kind of drifting lower, and it looks as though this channel, that's really what it is. We're in a downward channel right here. And it looks like that's likely to continue until we reach that downside demand. This is kind of the channel here, if you will. Oops, there it is. Just kind of channeling down until we reach 26.08. And we'll have to wait and see when we get there if there's going to be any kind of a bounce. But other than that, not much else going on there. XRP, we ended up breaking to the downside out of our consolidation. Remember, I was mentioning this before. This is last week. Well, 2 weeks ago when we talked about cryptos, I said, as we're consolidating, we usually break in the same direction that you enter, which is down. There's your breakdown. So we haven't had a weekly close below, but we are in bearish territory with the RSI below 40. So this is legit. On the breakdown, we are likely to maybe retest and then continue to go lower. So if that's the case, let's see, where's our demand here? And where we might be able to put in some sort of a bounce if we get anything. And there's a little demand that right in this area, we have drop, base, but not a great zone. We've already tested it. So as far as untested weekly demand, I would say it's down here. I'll put that snap back on. That's not even great. The first one that we're in right now, as you can see, has been tested multiple times. We have drop, base, 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 base. There's your rally. And how many times you want to test a zone? So that's not going to hold. We're going to continue to push down. And the momentum's picking up a little bit. You can see very, very bearish. Lots of bearish momentum. So yeah, we can clean this up a little bit. This is just a marking. And as far as any other demand zones, nothing great. So it looks as though we're going to continue to push down. I would say the only significant buying pressure we might end up feeling is around 26 cents. You see right there. So let's see, Cardano moving along here with the cryptos, another breakdown candidate. You can see it broke down, retested, overshot a little, but then continued to go further down. I don't remember if that was the weekly. No, it was daily, definitely. On the weekly, we have a possible divergence coming up here. Let me clean this up. Notice how we're making, like that there. We're making new lows in price, but not on the indicators. So that's a positive divergence. This is one of our bigger drops today, down 3.5%. But you can see that we may be getting ready to bounce a little bit. So let's see if there might be a bouncing opportunity here and where the demand zone might lie. Well, there's nothing here. Really, the only demand is this, even though we kind of shot through it once. But on the weekly chart, that's it. About 38 cents. So moving down to the daily time frame, again, you see lots of bearish momentum. There's no divergence here, so it's not ready to bounce yet. It was on the weekly. Okay, again, you see the divergence where prices are making new lows, but the indicator's not. But when you go to the daily chart, you lose that. You're not seeing that yet. So it looks as though we're going to continue to drop a little bit more. We can try to find where the bouncing point might occur, but it's not here yet. So just be patient. As a matter of fact, really the only bouncing area I see is down here at 44. We have rally, base, and rally right there. So yeah, it does look like it's going to continue to push downwards. Thought we were going to get a bounce, but it doesn't seem like it when you start to look at the details here on the smaller time frames. So just be very, very careful. Most of the cryptos are still pretty darn bearish, and we're forming new supply zones as we go down. You see drop, base, base, drop, and there's others above it. So if I dropped into the 4-hour time frame, again, look to see if there's anything that's telling us we could get any sort of a bounce, and there's nothing. We're making drop-based drops and retesting them. Weird. Yeah, it just looks like it's still moving down. So some brokers, you got to be careful. Inside the U.S., it's hard to get margin and be able to go short, but you can also do that with some of the futures markets, selling the futures contracts. And we're in demand right now here. Let me just take a look at that in a moment. Overseas, if you're watching from there, there's definitely opportunity to get as high as 100-to-1 leverage and be able to short these markets. So you just got to check to see if you can do it, depending on which exchange you use, like Kraken or others. So here we have only signal for a possible bouncing point would be right in here. What am I on? The 4-hour time frame? We have drop, base, rally with good buying pressure coming out of 70, 66.90, 66.43.20. So let's see what's happening right now. If we look at this with our momentum, still very, very bearish. And that would be the bouncing area that I'm looking for. So this one is not going to hold. That's the area I look for the bounce. 76.690. As of now, our target, if you're buying in that area, would probably be just above 82, like 83, 84 area here. You've got a little drop-based drop. This hasn't really formed one. We'll see if anything else forms along the way, but that's all I got there. Solana is a big loser today, down 6.79%. Look at that red just bleeding out. Go to the weekly time frame again, and you can see that we dropped from a weekly zone. That's why we're moving down so fast. Look at that. Drop base drop, ran into that, and just blew to the downside. So looks like it's going to continue to move down. There's not really, well, maybe a little hold us here, but it doesn't look very good until we get down to 25. No, actually not that low, about 28. Is it? Nope, that's not the high. There it is. 29.51 is where we're heading right now, according to this. So lots of bearish opportunities still. Okay, so again, looking at this, pretty bearish altogether. We go down to the daily time frame to see if there's any other bouncing possibilities, and there is actually not too far away. Might get a little bounce out of this area. We've got drop, base, rally. Didn't break to new highs. It broke these highs, so that might help. Do not go long, though, right away if the RSI is right below 60 because you're going to break through the demand zone. What we need is a positive divergence to get out of that. So if we have a low and then a higher low on the indicator with lower lows on price, that would be the opportunity to get in. As far as where it might bounce to, well, it doesn't seem like a good area here. There's supply. It's already been tested, so we may go to the untested portion of the zone, which is right there. But that's all I see so far. If we can bounce in this area, we are, well, let's see, we're hitting this area too. We got drop, base, base, rally, so we may end up bouncing a little sooner. The problem that I've said is that the RSI is below 40, and we've gone pretty deep inside of that zone, so that's not going to hold. Never mind. Stick with the 82, 86 to 77 area if you're going to look for a bounce. But again, the only way it'll bounce is if you have some sort of divergence, and it's not likely to make it all the way up here. As a matter of fact, you're not going to make a new high with the RSI below 40 as you try to bounce, so you're going to have to get out before we hit 100 again. So look to see, maybe I would target right around there, 93, 91, if you bounce out of that 82, 86 area. That's all I'm really saying. If I go down, maybe do a 4-hour time frame, any more detail, nothing there really helping us. And you can see this became a little bit of a supply zone as well, drop, base, drop. So very, very bearish so far in pretty much all these markets. It has been for a while. Polkadot, you go to the weekly time frame, and still pushing down, coming into some weekly demand. That's good for Polkadot. You can see we have drop, base, rally, although that could be a retest of a prior zone. Let me take a look. Yeah, you can see that it was actually a zone previously, so it may not be fresh and standing on its own. But if it's going to try to base, that would be the area. Unfortunately, though, it looks as though we're pushing, below 40. So much bearish momentum, and we're leaving behind new supply zones along the way. So even if we do bounce, where are you going to go? There's not a whole lot of room to bounce. So looking at this daily time frame now and zooming in, you can see that we've got nothing as far as a good demand zone there. That was the weekly, but nothing on daily. And again, it was a tested zone. So if I go back to the fresh area of it on the daily time frame, now it looks really good here. So that would be your bouncing point, 871, 720, and bouncing up to 1666, 17. Well, that's a big if, and we have a long way to go until we get there, but that would be a great buying opportunity if we can get the momentum to push us back up. All right, winding it down here, we can take a quick look at Luna, and on the weekly chart, Luna has held up better than some of the other securities out there. However, we're kind of giving up lately here. As you can see, a little bit of a push to the downside. We have a great weekly demand. Oh, that's already been tested, though, so maybe not. Go to the daily time frame, and, well, we're trying to make the same lows, but we're not getting the momentum. That's a positive sign. This has been tested multiple times, though. You can see this is the origin of your demand here. Rally-based rally, tested, third time. And we might get a positive divergence here. If we come down to the prior lows on Luna, but the RSI is higher, look for a bounce. Now, it may not be a very big bounce because, unfortunately, it looks as though a rally-based drop right away. So you may get stalled out right around 88.47 from that 75 area. So you might get that bounce from 75 to 88. And that's about it. If we have enough momentum, which I just don't see, but if we did, then we could push all the way up to 108, but I just don't see that happening. Anyway, our last that I'll look at right now is Link. And looking at Link, we have broken down quite a bit here. As you can see, I have projections going as to where it's likely to continue to. Let's see, that's the daily time frame. And yeah, we've already surpassed, well, we had a bounce near the first target, moving down to the second target as we speak. And there's just nothing here holding this up. I might as well take a look at Dogecoin since I'm here. And garbage, waste of time. There's really nothing going on there. We do have a little bit of Doge demand right here at 12 cents and 11 cents, but it looks as though we already hit that, and we're trying to make another run for it. If we do hit that area once again, look for the untested portion of the demand to possibly bounce, and that would be 12.25, and you also need to be above 40 on that RSI for a little bounce there. I mean, we've had good bounces before. I mean, that's 5-cent move to the upside, so you're looking at what, a 40% move up into this previous little bounce. If see if we could redo that again. So it could be interesting. Anyway, that's what I got for you this week. As far as the trade opportunities and ideas, I want to thank everybody for being here. If I go back to my cryptos, there we go. I want to thank you for being here. It went a little bit longer than I had before. It is a long video, but hopefully you enjoyed it. Please hit like if you did. Next week, as I mentioned, I got a surprise for you. We got a guest that's going to be coming on, so it'll be a little bit shorter, but a different type of format here. Hopefully you enjoyed everything. If you did, let me know, and stay in touch with me via email or Twitter or wherever you want. Until next time, everyone, trade safe, trade well, and take care.